My name is Megan Nelson, aka Crypto Megan, coming to you here at Consensus in Miami with a very special episode. We've got Alexis Sirkia here, the captain of Yellow and co-founder of GSR. Welcome, Alexis.
Thank you for having me, Megan.
Yeah, I mean, we've already been having such an incredible chat backstage. You've got such a different perspective on this space, which I'm excited to share with our audience today. And, as we're getting into this, your background. So first we're going to start with your background, and then we'll get a little bit more into what Yellow does. You entered this space very early. Tell us a little bit about how you got involved.
Yeah, I was very lucky. I used to work in the European Space Center in French Guiana. I was helping Ariane 5 space rocket. So I was a very technically oriented software engineer. And I had a friend from kindergarten, primary school, and then middle school. And he used to work at Goldman Sachs. And one of his people that reported to him had left to Ripple. And they described it as this very young company in Silicon Valley that was printing money, and they needed a market maker. And I didn't know anything about market making at the time. That he had been market making for some oil in Goldman, and he knew the whole dictionary about how to do very professional market making that didn't exist at the time in the crypto space. So around 2013, we co-founded GSR. And it went well because with his excellent knowledge in market making and my know-how in technology, we created, I think, one of the best fintech companies, which with his financial and my technology, we just outgrew everybody in this space. It was like being professional poker players in an amateur tournament because there was
That's a good analogy.
There was no professional people from the traditional finance industry that had an interest because it was a very small industry at the time.
Right, very niche.
Yeah, the spreads in XRP that we had at the time were like 15% or over 10%, and it was like $400 of liquidity on each side. It was like the markets were like dry. So yeah, it worked really well. Like we brought liquidity to the space, to Ripple, and then to all these other coins, and it worked out really well, and that was the journey.
So GSR, became one of the top market makers in the space and is still there today.
Yeah.
So I like what you described as, you were the perfect combination of tech. And I think in order to have success in a project in this space, you need to have expertise in different backgrounds in order to make that work, right? So you guys came together, it was the perfect storm. You founded GSR, and you saw the need for more liquidity. So it was pretty dry.
So that was GSR. And then around 2018, it was already very successful. That was like 5-6 years later, it was already very successful. And then I started to evolve and see other needs in the space. Just like liquidity there was no liquidity in 2013, and it was very difficult to buy or sell. Anything outside of Bitcoin was impossible. And in 2018, what I saw was this constant problem that exchanges were just falling down and people are losing all their assets to exchanges. And we've lived it so many times, with Mt. Gox, the big one in 2014, and then this exchange that praised itself the most secure exchange, JustCoin it was. Nobody remembers today, but JustCoin, this Norwegian exchange, from one day to the other, it fell, it got hacked, it lost everything. And Bybit and KuCoin and FTX and
all of the things that we've had to endure in this space.
Bitfinex as well lost all these coins. So many exchanges have lost to fraud, and I didn't understand. In Spanish, it's en casa del herrero cuchara de palo. It means in the house of the ironsmith, we're using a wooden spoon, and we're praising this trustless crypto, which is like this alternative, you can have store of value without trusting a government, and you can send value without trusting banks. And Ethereum, you can execute a contract without trusting people or arbitrate without trusting a judge. So we have all these trustless things, and we're not, however, we still need to trust an exchange to trade and keep our coins there to trade. And this is a problem I set myself to solve. and it was like an engineering's problem, that we tried to solve. And it was a difficult problem, but we did it. It required I think about 500 man years of engineering.
Wow. Wow.
About 100 people, 5 years, I would say, like different people with different attempts and a lot of failure, 2019, one solution didn't work, 20. And around 2021, November already, Consensus published their state channels paper. And we saw, wow, this is thinking outside of the box, and this is going to make it. And it was not it was state channels is like an evolution of lightning networks for Bitcoin, but for Ethereum and any smart contract language. And this solution that seemed so simple, eventually we managed to we developed about half of the code there, but then we restarted from scratch. And
wow,
just
that's quite the process.
so many things. And then like around 2022, 23, we managed to get our first prototypes working with this technology. And then we had some amazing people join our development efforts, like Alessio, who was the CTO at Cosmos. He built Cosmos, and he joined us. And then we had the CTO of Bybit. He joined us to build this, and they joined us. Of course, they joined us, like, I'll say transparently, for a fraction of their salary, just because of what we were building. And
You got to have something pretty compelling to have people leave their cushy, comfy jobs to come over and build like that.
yeah, and then so we built this trustless protocol between two parties. So a trader with a broker, or an AI agent that doesn't trust another AI agent. Any of these use cases can use the Yellow protocol to transact with each other. And I'm so proud of what we have accomplished, because it's really what the Web3 space needed, what Bitcoin, what Ethereum needed to make a successful, complete business.
Right.
Now we can build Web3 businesses that run autonomously, which was the dream of Web3 of Gavin Wood and Vitalik in 2014, with the Yellow network and the blockchain components. Like, it connects to any blockchain. We can now build a complete business, autonomous businesses, which is what we set to do.
And allow them to seamlessly communicate between each other.
Exactly. So, for example, a bank like HSBC can trade against Binance without trusting Binance.
Interesting.
So this is one of the use cases, and that's why we're integrating, for example, into the core banking software of many banks. Like about 500 banks are using this core banking, and we're integrating into them, so they will be able to trade crypto without the risk of exchanges. And of course, it's very compelling for them. And that's one use case. But then there's about 500 different use cases of different people that have developed different apps on the Yellow SDK and on the Yellow protocol, and different. And now we see the trend is AI agents, because
Absolutely.
two agents don't trust each other. So with the Yellow protocol, these agents can put lock some tokens on escrow. And there's a smart contract adjudicator that will only intervene if required. So we do our business peer to peer,
Right.
without third party intervention, without the blockchain. And then if we have a problem, then we raise our proofs to the blockchain that will settle the dispute. So
interesting.
it's very technical, but
That's very interesting.
it's very technical. Not sure how to explain it.
I haven't heard that method in anybody else's protocol. I mean, this is unique to what you built.
It's unique to what we built. It's based on Lightning protocol of Bitcoin, but extended this philosophy to Ethereum. And in Lightning, it didn't work because it's not very capital efficient.
Right.
But in this method, because you're only locking the deposit for a very short time of the transaction, it's actually quite interesting, and it allows people that don't trust each other to interact with each other And
Which is our biggest problem in this day and age, right?
yeah,
Is who do we trust? How do we trust them? And with so many scams rampant and things happening, and it's so hard to know where to go. So you've built a solution for that.
which is the extension of the philosophy of Satoshi, of trustlessness, and we're talking about later, that everybody's talking about decentralization, but decentralization was just a means to the goal. The thing we're solving is trustlessness. So now we have like Bitcoin for value and for blockchain for transfer of value. We have Ethereum and all the smart contract languages for execution and arbitration. And then we have Yellow for the peer-to-peer part of the business, which is usually what happens always. There's like business always starts peer-to-peer, and we only settle or arbitrate if we have a problem, or arbitrate if we have a problem and settle at the end of the transaction. So maybe you,
A dispute of sorts.
yeah, there's have dispute. So maybe I ask, you're a contractor, and they ask you A, B, C, and I settle at the end of the month. You know,
Right.
and that's normal way of business. But in blockchain until today, we're settling A, we're settling B, and we're settling C. Everything goes to the blockchain. It means like we are publishing everything. But in the real life, you're a contractor. We do ABC, and with Yellow, how it works, we both sign cryptographically, but we keep the proofs. You keep the proofs, and we keep the proof of A, the proof of B, and the proof of C.
Right.
I bought one Bitcoin for you for 80,000. I bought an Ethereum for you for 3,000, and you owe me a Bitcoin and then Ethereum. And then you don't want to settle. You don't want. So I will raise this dispute, and I will have this proof that we agreed, and I will raise them to the smart contract, and the smart contract will adjudicate me from your security deposit. Will adjudicate me my profits or losses. So that's one way to do it, but.
That's a very interesting concept because we're so used to settling these kind of disputes with people who decide based on their opinion, right? Or, I mean, this is cryptographic proof that we don't need that intermediary to tell us who's right.
And
right?
think about AI agents is the big use case now, because with people, you had like thousands of people, and you can have some arbitration when like human intervention. Like, for example, in eBay, when you're buying something and you don't receive the goods, there's a human being that is going to settle and fix that.
Right.
But with billions of AI agents, you have to upgrade to something that is automatic
A
and
more efficient system.
yeah. So our system allows peer-to-peer between AI agents, and they can do their business with their cryptographic proofs. And if everything goes all right, they will not need to raise anything to the smart contract. But if they have a problem, they have this option of complaining, and the smart contract, which is like an adjudicator,
Right.
and it's different adjudicators for different businesses. So, for example, for an airline business, there is this adjudicator that knows how to read if an airline booking code is valid.
Right.
Okay, so you're a travel agent selling me a cheap ticket, and we both put security deposit, and I send you, and you send me the booking code, and I say, oh, this booking code is not paid for, or is a fake booking code.
Right.
So the adjudicator will go to the airline and will confirm it's an invalid, and you will lose your security deposit, and I will receive your security deposit.
Interesting.
But if you give me a good booking code, you will receive the payment of the airline. So this allows two agents that didn't trust each other so it means that I don't have to go to Expedia, a website that I trust, to buy. My agent can buy from the best person in town, from the best offer in town. And it allows innovation from young entrepreneurs that have a better way of dealing with things. It allows, it's really big when you think about it. Philosophically, I'm very respectful of Bitcoin, but so it's difficult to say. But the idea is bigger than Bitcoin.
Wow. Heard it here first. I mean, I'm sitting here trying to process this, and it is kind of solving the main issue that we have in order to go forward. The main barrier to entry that's blocking sort of like the way for the adoption and the mass use of this.
Exactly. So adoption was what I felt so sorry that we built this good technology, but nobody's using it in the real world. So that was the thing I wanted when I left GSR and built Yellow. That was my main focus. That's like, we need to make it so that anybody can adopt it. And we seem to have done something right, because like just after launch with 1,000 developers using our SDK and building apps and
That's massive. I mean, that's a hard thing to achieve as a project that's just out the gate, right?
I think so. And the token is doing well and the people are believing in us. So yeah.
I can see why. I mean, so when we talk back about trust and, people that are behind projects, I believe that with your knowledge and experience and where you come from, what you've built, you know what it takes to build something successful in this space. And it is not easy, as we've seen throughout the various cycles and different projects that came about and they're no longer here. It takes a lot. So I think that with your knowledge and your background, that trust is then established, say, hey, there's something interesting happening here. And it's as if, would you agree that it's almost as if blockchain was built for AI agents?
It's exactly the use case of blockchain and things like our technology. It's like the perfect solution for AI agents, and it's great because the technology is now mature for crypto. The crypto technology, including ours, is already quite mature because of so many years of development.
Right.
And now we have this nascent industry, which is AI agents, and we have the perfect technical solution. And it's just an industry that is here to stay. Unlike the previous cycles like ICO, NFT, meme coins, and collectibles, and all these things we've had, here it's like a solution to a new industry because AI agents is a new industry.
Right.
And we have the perfect solution, at least for institutional, maybe for retail. I think Visa, MasterCard, they still Stripe, PayPal, they still have some because they have the retail market already.
Right.
And everything is connected to credit cards. So initially for retail, maybe it's not the perfect solution because Visa is already connected, let's say, and crypto isn't yet.
Right.
But for institutions that don't use credit cards, institutions do big payments.
Right.
And that's the big piece of the pie of upcoming agentic economy. Institution is like 75% of the upcoming industry, and retail is about 25.
Okay.
So crypto is the perfect solution for institutional AI agents and also for AI agents, but you need the two sides. So you need the users to also adopt crypto, and that might take longer.
Interesting. So the theory here is that the institutions are going to adopt this technology before retail does.
I personally think
In
so.
general,
I personally think so because it's a better solution, and institutions, they do things at large, and banks are not yet connected to, and banks are going to catch up, and some banks are connecting already. I was in Money 2020 and I saw that some banks are already giving agentic rails, but because the banking world is so fragmented,
right.
there's like thousands of different systems, and so we have an edge in the crypto world to give a better solution that is less fragmented and more global. It's the same system, it's the same Ethereum here or in India or in Indonesia, or the same Solana or the same XRP, Ripple, whatever. So the same network can operate globally in crypto, and that's not the case in traditional finance.
Wow, that's pretty powerful. There's a lot of big ideas and concepts that we've gone through just in explaining, what you've built. But so I want to go back to some of your philosophies now, because I found it really interesting, and we don't see this perspective often in crypto.
Okay.
And especially not from someone so long in the space, right? So we talk about trustlessness and decentralization as if they were one. A lot of times, many people equate them as being synonymous.
Yeah.
What's your view on that?
The big thing that people spoke about in the earlier days of crypto, like it was about trustless and removing trust. I have an email that says when I spoke with Vitalik, and he describes Ethereum as a trustless cloud application logic. Okay, that's how. But we never really spoke about decentralization. Decentralization was some buzzwords that came around 2016, 17, and all this DeFi. Initially, it was about trustlessness, and we always said that decentralization was just the means to the goal, and the goal was always removing trust from a third party, giving an alternative where we don't need to trust. So, for example, Bitcoin is an alternative currency where we don't need to trust the government, we trust math.
Right.
So
It's one of the core building blocks of the entire space, right?
in blockchain, we don't trust banks. We trust the blockchain to transfer the value.
Right.
So we don't need a third party. We have the blockchain.
Yes.
It's still a third party, but it's like the blockchain.
Yeah.
And Ethereum, we don't trust people and we don't trust judges to execute or arbitrate. And so this is the important thing about trustlessness, and it's not decentralization. And I feel that the right word should be TrustFi.
TrustFi. Okay, that's a new one.
Not DeFi.
That's a new one.
And if we would have been called TrustFi, I'm sure we would have had institutional adoption way earlier.
Short little shift and we would have had everybody on board. Huh?
By calling it DeFi and all this degen economy, and but institutions didn't want to get associated. If somebody would have in marketing would have just said TrustFi instead of DeFi, crypto would have gained popularity earlier from the institutionals because they would see it as technology they can trust,
Right.
and that's what it is. That's what crypto technology is. It's technology that you can trust to execute without people.
Right. I really like that. TrustFi. We should have come up with that earlier. Would have solved all our problems here in the blockchain space that nobody trusts us. No. But so that's very interesting. So what you're saying is that they're two separate things, right? And you're saying we actually spoke about this, that banks are actually decentralized. Nobody would think of them like that.
Yeah. And a lot of critics to decentralization initially, when the term was becoming popular, said, no, the banking system is very decentralized. There's tens of thousands of banks, each with thousands of subsidiaries and hundreds of thousands of people working in this ecosystem. And you can send from one network in Ethiopia, you can send to a different network in Philippines,
Right.
and different currencies and conversions. And eventually the money will get there. The legacy system is very decentralized, more than crypto, but it's not efficient. It's
More
very
than crypto.
It's more decentralized than crypto, yeah.
That's a very interesting take, and maybe more decentralized, much more inefficient, yet still decentralized. So it's not the same as being, trustless.
Yeah, and trust is so decentralization is like you have 30,000 computers, each fighting to approve the next transaction, and with this blockchain mechanism or this consensus algorithms, and that's one way to solve. But actually, with state channels, we solve trustlessness in a different way. So it's a different way where we actually don't require a blockchain, and we can. I don't need to trust you, for example, when we're trading with each other,
Right.
because I already have a claim. I have what they call instant P&L. So my profits and losses are instantly belonging to me, and the trader doesn't need the broker. So it's a different way to achieve trustlessness. And there's other ways, there's other paradigms of trustlessness.
Right.
But of course, decentralization is a very strong and powerful and useful one for many use cases, like settlement, for example. It's good when you settle something to have a consortium of machines to agree on the truth. But sometimes for certain things, you don't need a third party to approve, as long as you can use that third party in the future.
Right. No, that makes sense.
Like when we're making business,
Mhm.
we don't need a judge or a notary in most cases. We just
Doesn't need to go all the way to arbitration.
no. That's
Yeah.
only when things go wrong.
Right. It's a very interesting concept. It's kind of hard to grasp your mind around it because you've been used to operating for so long in a certain way. I would say that lack of trust, so to speak, is the biggest barrier to entry. It's the biggest problem we have. How do we interact in a way where we don't have to do that, right? And it seems like Yellow has come up with a solution.
It completes Ethereum. Bitcoin, I would say Ethereum completes Bitcoin, and Yellow completes Ethereum. And when I say Ethereum, I say all the smart contract languages like Bitcoin and Solana and all the EVMs, and I would put all those in the smart contract languages, which are basically executing and arbitrating. So it's the fifth step after store of value, transfer of value, execution, arbitration, the peer-to-peer trustlessness. I don't have a name for it, but I'll come up with a name.
You come up with something good, I'm sure. TrustFi, just like TrustFi. So I want to transition for a minute to investing in crypto, right? We were
Okay.
talking about your thoughts about that earlier, and
Yeah.
and maybe also what the yellow token, the function is of the yellow
Yeah.
token. So let's start out with maybe that, and then we'll
Yeah.
transition.
Yeah. So with my experience in markets and coins, I think in the past we probably have launched or helped about 200 projects at least. I don't know how many, but so many projects in my company. And personally, even if personally I have been involved at least in 3 or 4 per year for 13 years, that's
You've seen quite a bit then in our space.
like very, very personally, like maybe 40 projects,
Wow.
at least, I don't know, but so many. And unfortunately, if I have helped 200 projects, I would say that the ones that really needed a coin to operate is maybe only like 10. Okay. And I'd say that maybe 190, and this is a bit unpopular.
Hey, we're gonna say it here. We want people to hear the truth.
I would say 190 projects. We're only using the coin as a mean of fundraising, which is really like they should be using equity.
Right.
Okay.
Yeah.
But because the equity markets are so controlled, a lot of projects they try to find this utility that is not real.
They try to invent something as an afterthought, not something that actually makes a difference in the system, right?
So the real fundamentals of investment, and I think this is investment advice. everybody says this is not investment advice, but I tell you, invest on things that have a solid foundation. And a good investment advice is investing. If you're going to buy a coin that has a utility, make sure that the utility is stronger the more valuable that the coin is. And what does that mean? For example, for Bitcoin, the more valuable that Bitcoin is, the more money that miners will spend to secure the network, because the bigger is the reward.
Interesting. Okay.
So the bigger is the reward,
Yep.
the more secure that the Bitcoin network will be.
Right.
And same for Ethereum. You stake 32 Ethereum, and you don't want to lose those Ethereum. So if Ethereum was like 1 cent, 32 Ethereum would be insignificant, and you wouldn't put all these resources to validate those transactions. And sometimes you would be incentivized to fake those transactions because the reward is not high enough. So the reward has to be high for you to be a good player and not a bad actor.
Right.
So the cryptocurrency has 3 purposes. One is reward good actors. Okay, so reward miners that sign a good transaction, or validators, or
Doing constructive work in space.
making the network secure, or like validating. Okay,
Yeah.
like doing the main utility of Bitcoin, Ethereum, or whatever token, Solana, you name it. To penalize wrong behavior. So if there's a bad actor, you need to have a valuable cryptocurrency to remove it from the bad actor. Just like in real life,
The
the
consequences.
the judge is going to penalize you, and you're going to have to pay some fine or something, some money, something that
Right.
and it's going to hurt you.
Right.
So it has to hurt you enough. So for example, in Finland, it's very cool because if you have a traffic violation, you have a speeding ticket, the ticket is proportional to your wealth.
Oh wow.
So
Well, that's a new one.
If you make a lot of money, so it will hurt you the same as somebody that doesn't make
Oh, wow.
that makes less money.
That's a crazy the finisher, really.
Yeah.
Wow.
So
On the cutting edge over there. I don't know how that would
So-
fly in America.
so that's the second behavior, and the third behavior is to bootstrap protocols. So when I'm sending money with Bitcoin, maybe I'm paying a $10 fee, but actually the Bitcoin miner is going to receive a reward from the protocol that is going to make up for the inefficiency. So maybe another $10. Okay. So maybe or maybe $90, depending on the stage of the protocol. So initially Bitcoin, most of the reward from the miners was in mining fees, and the small percentage was people paying fees.
Right.
So initially, sending a Bitcoin was maybe like $100, but you paid $10, and $90 was subsidized by the protocol.
Oh.
Okay, so it allows the real cost is $100, but it would be inefficient against the competition to spend $100. So initially, protocols like Bitcoin, Ethereum, or Ripple paid market makers to do liquidity. So all the good coins are using the protocol to subsidize the capital inefficiency compared to the competition. So to make it equally competitive, to make sure that what you're paying for is competitive compared to the competition. So that's the third use case. So when
So you
we're
say all the good coins are doing. Can you give us any examples of
See.
specific tokens?
Yeah, for example, Bitcoin,
Mm-hmm.
the real cost was maybe $100, but you only paid $10. There's a real cost when you count electricity and what the miners are
Right.
paying to secure that and to make that safe and all that hardware and everything. So they got a reward. So, but actually the reward was to do the job was from the protocol. Okay. And Ethereum, the same. Initially, it was proof of work and Ripple. So people were using banks to send money from one place to another. So Ripple said, let's pay market makers to do XRP, let's say USD on one side and XRP Mexican peso on the other side. And then people could send through the XRP bridge, could send money cheaper from let's say US to Mexico than through banks because they were subsidizing through market makers the conversion. So it's always a question of bootstrapping a network until you have enough use, which is something common in startups like Amazon. In all these years, initially they were not making a profit,
Yeah.
and then so money is coming in from investors to subsidize the startup. So in crypto, the third use of the crypto that a pure crypto should be rewarding to bootstrap the protocol if necessary. Like it's always been necessary.
Right.
So in Yellow, we took those three very primary use cases. Our primary function is an escrow mechanism between two parties. So you put some Yellow tokens as security deposit.
Okay, so that they're involved in the function of the escrow.
Yeah. And the node will reward you for the capital inefficiency of having put that. So if we were not putting extra money in escrow is actually making us less competitive than somebody. If I trusted you, we wouldn't need a security deposit.
Right.
So by having to put a security deposit, it decreases the capital it makes it more capital inefficient. So then the protocol rewards for the capital inefficiency, and then you get so that's the third use case. Then um, rewarding good behavior. So if you're using the utility, the protocol rewards you. If you're a bad actor, as I told you before, you're going to lose that security deposit and not going to
That's
receive
gonna
it.
make it hurt.
So
Yeah.
that's going to make it hurt. And the third one is bootstrapping the utility from the capital inefficiency. So rewarding good behavior, penalizing bad actors, and bootstrapping. So when you invest in a coin, you have to think the fundamentals of the coin that are important is that will the utility be stronger if the coin is more valuable? So that should be
Interesting. So that's like the main
Yeah,
filter investors
yeah.
should have in altcoins, right?
When they're looking at crypto, yes. And when I was in this panel with these financial guys, and they're saying you have to look at the company, the revenue generation. I said, no, you really don't get it. You don't get crypto. And I got this frustration already for 12 years, and still people don't get it today. How to invest in crypto and at least the fundamentals. Of course, there's so many things around the project that can
Right.
go wrong. There's the SEC. There's all these
Other
external
things you can't control.
all
Yeah.
the things you can't control, but at least the fundamentals, it should be my 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 utility will be stronger if the coin is more valuable. And I'll tell you that 90%, more than 90% of the projects, they fail this.
Interesting.
This
So that's
check.
just like the one main filter.
You should
Like,
check this. Yeah,
The more valuable the coin, the better the investment, basically.
the more the utility.
Right. The more the utility, so therefore it's a better investment, most likely.
Well, it's the number one filter of cryptocurrency. It should have this. If not, it means that you don't need a cryptocurrency.
I mean, this makes life a lot simpler, right? We're here
I know.
now. We've seen a lot of the altcoins underperform, to say the least. I mean, we are in a bear market, right? Or so many would agree on that. But so this would be the number one filter. We've seen a lot of them disappear, and people are wondering, it's a different investment landscape now. There's more tokens, and they're wondering, how do we do this efficiently? What do we do now? You know? So that would be the filter.
Well, for example, why did a lot of meme coins fail? Because if the meme coin was more valuable, did I have a better utility? The utility of the meme coin was very basic, just like a store of value, or maybe like a collectible, or
membership club.
Yeah, like yeah. Anyway, so
it's interesting. It's a very interesting filter. So Yellow's done pretty well as a token.
Well, we've only launched initially. We after so much experience with what happens when you list and the exchanger are asking you for some tokens in return of the listing, and sometimes they are quite greedy. They ask you a few percentages, 1, 2, 3, 4, 5%.
Yeah. So I've heard.
So the problem is that there is a lot of demand. There's not enough demand because the utility is not there. You know, you can't have a startup that has like $1 billion valuation. There has been only like 5 startups with $1 billion valuation in the real world.
Right.
Like I think SpaceX just put $1 billion, or there was Jets.com because they were buying. But there's only like really been only a handful of. But in crypto, they launch all these coins with really high valuations, and the exchanges, they just liquidate against a market that doesn't exist. So to build a successful coin, you have to grow organically, and just a successful startup, you have to grow organically, and you have to have like some utility in crypto or some sales in a startup that match the demand. So you have to match supply and demand
in order for it to be sustainable.
And if exchanges are asking like these huge percentages and they're just gonna dump, eventually there's a big demand supply imbalance. So we chose initially to only list on our own DEX. And it's done very well. We've done 5 or 6x since launch, and we'll see.
That's pretty phenomenal, given the conditions that we're in. I mean, it seems that you have the perfect background to understand the logistics and everything that goes into sustainability in a token, having co-founded GSR, right? And
it certainly helped, I have learned more by seeing the failures than by seeing the people that get it right. The people that get it right, they get it right because of so many different things, and they try to copy some of the playbooks. But for example, like a coin I love, Linea from Consensus. I love what he's done. I love the integration with Ethereum, the extension. I have the utmost respect for Joseph Lubin, co-founder of Ethereum. You know,
right.
So, and I love Linea, but for me it was I don't count Yellow because it's my own coin, but without counting Yellow, for me it was like the best coin launched in the last 10 years since Ethereum. You know, like from the connection and everything. So from the technical perspective, it was the best.
Right.
But from the launch perspective, I think it was the worst coin in the last 10 years.
Oh, no.
And I invested heavily in Linea. So like disclosure, I invested like very heavily in Linea.
Right.
I lost, now I'm down at least 80, 90%. But I'm still a holder, and I still hope that they make really, really well, because I really believe in the underlying technology and the fundament and the integration with Ethereum, and sort of extension of Ethereum, the same as we were building in a different extending Ethereum a different way.
Right.
And such a believer in Linea, but their launch was horrible because.
And all of that makes a difference. It's the whole atmosphere in one, right, that goes into launching a token, getting it into the ecosystem.
I wish, because I love this project so much, I wish I would have been with Joseph Lubin to help him launch as like co-founder, like help him to launch with all his team.
Oh, man,
he did so. And then I met with him, and I said, oh my gosh, like, you tell me next time, just tell me straight, I didn't have his contact.
Oh my gosh, just as simple as that, right? Just an introduction, and maybe everything could have been different.
I spoke with him like 1 hour or something, 1.5 hours, and we had like a really honest conversation, because I'm a really Linea believer, and all my team loves Linea, my technical team.
I'm following it as well. I mean, I also am a fan.
Hopefully they will do well.
Yeah, no, and it's good advice for everybody who's watching this right now to learn from all of these things that you're discussing and actually just to simplify this. You don't have to overcomplicate it, right? There are some core principles and filters that you need to have in consideration.
So Linea was, don't trust me on the fundamentals because you can still fuck it up. Because for me, Linea had all these, the utility and everything that I said before.
All your checks, your boxes.
Applied to Linea. But then there's so many other things that can go wrong, as we saw with Linea. In Linea. I don't know if to say Linea or Linea.
I say Linea because I live in Spain, but maybe it's Linea. I don't know. We'll have to ask. We'll have to ask him. But yeah, I have been following that token as well. We have a trading company and we've been trading the token. So it's interesting. So wow, I mean, there's so many different things that we've discussed on this podcast, just from different perspectives and points of view that I've never heard before in this space. So
well, somebody has to speak. The good thing is that not being a JSR anymore, I can speak without the filter.
You can speak freely.
I can speak and I can say that, I don't have I can tell, like, I don't have these clients that I'm going to upset by telling them that they should be doing an equity fundraise instead of a
token raise.
Token raise. All these gaming, there are really cool games, that they don't have an absolute utility. And sometimes the founders tell you, we just need the money to build the game.
I've talked to so many founders that they pivoted away from the token and they're actually thinking about how do we make revenue? How do we generate revenue when the value of the token isn't there? Because that's all they depended on, right?
Yeah.
So that's not a sustainable economy.
So it's really great to be able to speak freely of what you think about the markets and advice and tell people that make sure that there is some fundamentals in what you're buying, because in crypto it's just like thin air, and the space is already so volatile, as you see in Linea. Like even a good project with a good founder and a nice team and like so much money behind the project, even they can
have turbulence.
They can perform. So there's so many ways to lose money. At least look that the basic things are right.
All of the checks that you mentioned earlier.
Well, at least those. There's so many.
At least those. Those are the main filters, right? Let's get those right. So it's been a really enlightening episode.
Okay.
And I think your background speaks for itself, and it's obvious how that transcends into what you've built at Yellow and all of the knowledge you've acquired over all of these years. So
I haven't built it myself. Like my team is amazing. I just we're 3 co-founders, and we had a shared vision. We merged Yellow and Openware, and Openware was building these open source exchanges that was used by more than 50% of the industry.
Wow.
And so they had the exchange experience and I had the markets experience, and between the two, we decided to merge to build this, with the 2 different teams and different
with the expertise from the different industries.
And then we hired amazing people like from Polkadot and Bybit and I don't know, Cosmos and all these Ripple. Like our chief evangelist was the guy
that's a powerhouse team.
Yeah, my chief evangelist was the one I was watching the videos in 2013-14 explaining how to integrate Ripple. And so now he's with Yellow. He was a few years, like 2-3 years, like 12 years ago with Ripple. Now he's our chief evangelist at Yellow, and he's explaining the community how to integrate Yellow to build their Web3 apps. And so it's my shared vision between the 3 co-founders, and it's the execution of the team. I don't want to appropriate myself from the work of others.
Absolutely. It's a team effort, and it sounds like you've got a wonderful lineup
amazing
backing this. So that adds to, when you do those checks and you're looking into projects, it checks a lot of those boxes, I'd say. For me anyway, I look at the team. I told you, for me, it's very important that you have expertise from all areas and not just one idea that comes out of people with no experience in the market.
Yeah, and we are lacking a lot of experiences. Like we don't have everything we should have. Like I see other teams with like very good fundraising people or people that are like, so we have a limited skill set compared to some bigger teams in the space.
But the fundamentals are there. The design, the system is ready. The tech is ready.
The product is there, and we focus too much on the product, I think, and now we want to focus on telling the people what they can do. Right. And just let the value of the network grow organically with the community. Like the communities are fans, you know.
Oh yeah, I've seen it on X. They are big fans. And I do have to say, like, I'm so happy to hear this because for me, as a founder and just having been in the space forever, when you grow organically, when you take the time to do that, it's a painful road. It's a longer road in a lot of ways, but it always, I have such conviction in that it always pays off and that you will always make it to where you want to be that way eventually. And the quick cash, the quick grabs, the quick things have never worked in this space.
Yeah, we have a 10 year vision. Like we have like a 10 year like vision of the things where what we're asking now it's a community project. It's not even our project anymore. That's why I call
And
myself
you're the captain. You're the captain of Yellow. Yeah, we didn't get back to that. That was your intro.
Yeah.
You call yourself the captain because you're steering the ship, but there's no sort of central figure.
It's a community and it's a leader, but you know, in a ship, everybody. And I really think it's. I didn't call myself the admiral because there's many communities. There's many people steering the ship, the different ships of what is now Yellow. So I lead the community, like I would say the fans, and then tell them about what we're doing and who we had a podcast with, and get them excited about what. Our foundation is called Layer 3 Foundation is like investing in and who we're talking with. But there's actually it's amazing to see parallel efforts using our technology, and we just try to help all the people around us to. So I think you cannot be chairman or CEO of a community.
You're disrupting so many time-old, things here all in one podcast.
But what is the right word for a leader of a community? Like initially Vitalik for Ethereum, I would say had this role, but you know,
it's hard to figure that out.
He calls himself chief scientist, and some others like Elon Musk, or he's a very community oriented company person, so he's CEO or something, but he's also like chief engineer because like there isn't really a word when you speak to a broad audience.
Right.
And I just like captain because I already live in a boat, and I just like, and we have the Yellow Navy.
I like that, the Yellow Navy. So is that their name then for the community?
Yeah.
The Yellow Navy.
Yeah, and some guys are first mate and crew and deckhand and second mate. And
that's fun. I really like that. I think we've disrupted so many old ideas on this podcast, and it's interesting. I think people have to rewatch this several times to really grasp what's been said here because it's powerful. It's powerful. And so now, as we wrap this up, Yellow, how can people get involved? How can developers get involved? Where can they go? Where can they find you?
So we have different portals for different people. So on the people that are interested about our project, and more like developer oriented, they can go to yellow.org.
Okay.
The people that are more like business oriented and the ecosystem. So if you're an app developer and you want to get a grant, so the grants are being managed by yellow.com, which is my business partner is managing that ecosystem. And we also run a media arm as part of yellow.com. And the thing is that we want to give exposure to all the projects. So we have grown the media arm significantly to millions of users.
That's amazing.
And so because every company is a media company, but we thought that one of the things, what can we give, like as an incubator, what can we give extra, that is not money, that is very valuable for new companies, and this is exposure.
Oh, yeah.
So we've really grown, and we're growing the media arm of yellow.com. So yellow.com is ecosystem and media. Okay, which is funny. And Yellow.org is the foundation that is just heading everything that is development and contracting different companies. And then Yellow Pro is a showcase of what can be built with Yellow.
Fantastic.
So it's a DEX, but it's only one of the 500 projects being built on Yellow.
Wow.
We showcase this trustless peer-to-peer, but really it's one of the 500 projects.
That's fantastic. Yeah.
So we have like 3 parts for different people that are interested, and just contact us. We have a Twitter. Our X is Yellow. So just go.
Pretty easy.
Just go to Yellow on Twitter.
Become a first mate maybe and join the crew.
Or Telegram and.
Yeah.
But basically, we're looking for if you're a developer and you want to build a Web3 app that is a complete Web3 app without people knowing that they're actually using blockchain, because that's the abstractions that you can have with the Yellow SDK. You can write an app and you can log in with your with your Gmail, and you don't even know you're using a wallet.
So that's the number one narrative of this conference, is how to make it seamless, so people don't feel it.
Right. So that's what you can do with the SDK. You can build Web3 apps, work on any blockchain, and they are seamless, and so you don't have to choose first. You can choose later, and then if you're into more like business and you want to create your business and you want to get a grant, then you go to yellow.com. And well, I'm here always to answer any questions, and I don't know.
No, I think it's wonderful that you as the captain of the ship of the Navy, that you steer us through like this. And I think there's a lot of things to think about. I think it's great that you're doing this. You're coming out there and you're giving those projects notoriety and eyes, because that is what matters in this space, to get out there, and that you're doing all the right things. So,
I don't know if it's the right things, and I'm sure we're missing some things, but we just do what we can. And it's nice that now, at least in the US, there is some sort of regulatory framework
guidelines.
and these guidelines. This has helped us. We did Reg S and Reg D uh, public sale initially to launch our token to US people. And now with text, there seems to be some clarity as well. I think we're going to be able. Our legal is still checking, but I think we will be able to bring Yellow Pro to the US. We want to be compliant, but like there seems to be. So I love the current market, and hopefully we can operate in the US as well.
Yeah.
And people in the US can be part of this journey.
Looking forward to that. Myself being from the US, Alexis, it's been such a great conversation. I hope to have a part 2 very, very soon and catch up with you somewhere around the world. We're very excited about what Yellow is building, and we can't wait to see the evolution.
Yeah, thank you for having me.
Thank you so much.